Welcome back. You're watching the Mutual Fund Show. To understand how to read the performance of Mahindra Manulife and also to give you some outlook on how to approach mid-cap and small-cap investing, I'm joined by Prableen Bajpai as well as Santosh Joseph. Thank you so much to the both of you for joining in and appreciate your patience in this. I will first come to you, Prableen, on what you make of the outperformance of Mahindra Manulife, and then I'll quickly get a view from Santosh as well. Prableen.
Good afternoon, Alex. And I was listening to your conversation with Mr. Sangvi. Good insights there. Definitely, both these schemes have given spectacular returns, and it's hard to ignore toppers. Both of them followed a mix of growth and value together. Very, very efficient picking in terms of stocks and sectors. So broadly, 80% of the construct is, with a bottom-up approach, and 20% is, on the sectoral calls. So definitely they got their sectors right for them. PSUs, industrial capital goods, auto ancillaries, all of these have worked for them. And small AUMs, agile, and I think they've been holding a decent amount of cash as well to, capture on the opportunities that come along the way. So definitely, I think both of these schemes are, will be and should be on the radar of investors. But coming to the small cap first, Alex, it's just a year-old fund. And of course, the year has been phenomenal across the category. So we haven't seen the fund through a down phase yet. So I think that is something would be interesting, how the fund manager, because both the schemes are managed by the same set of fund managers. So it would be interesting how they are able to manage the funds during downturns. And coming to the mid-cap, it has been there since 2018. And even during the corrections, it was able to beat the benchmark. Very few of the active funds are able to beat the benchmark. So even during the downturns, the mid-cap managed to do that. So I think a great, selection process there. And so far, the convictions have proved right. And I think currently now they are overweight on capital goods and financial services. So let's see how that plays out in the coming year.
Santosh, anything to add? I pose this question to Krishna as well. The maneuverability of a smaller AUM has held them in good stead.
I think some of things have gone right for them, and I think you alluded to most of it. The size and the ability to get flows when your size is small and when you have a right portfolio is actually magic potion for a mid-cap and small cap to do well. So your case in point for the Manulife mid-cap and small cap is that about a year and a half ago, when mid-cap and small cap were not in favor, you had size going for them, they had liquidity, and you had flows coming in as performance started picking in. So that combination has made well. And I think we just heard the fund manager also speak. The beauty is that when you're flexible or nimble with the portfolio positioning, especially in a market like what we experienced in 2022 and 23, extremely choppy, and very few of us expected this kind of an outcome. I think he's just hit it outside the park, taken the most of the situation. It's like, you got good pitches and you got great pitches, and in a great pitch, how you make the most out of it.
Right. Going forward, though, how would you approach the space? I ask because I was looking at the AMFI numbers, guys, and 64,000 crore rupees of money inflows into mid-cap and small cap, mostly into small cap. How should the and that doesn't stop. It's continued around that same trajectory. So there is a little bit of concern for people that are watching the space, right? I'm guessing advisors like yourself are advocating caution, but what specifically, Prableen, would you go into 2024 doing?
Alex, definitely money starts to chase returns. And in this case, both these segments have done phenomenally well, as I mentioned. I think going into 2024, what is important is we are still, a few months, elections are in mid of the year, and we may actually see a pre-election rally. We may see an interest rate cut during the year, which can again prove to be great for the mid and small cap space. So valuation wise, while we say that, if we look at the mid caps, they are already trading at, at 38% premium to the Nifty 50 as compared to the 3%, which is the historical average. And even the small caps are at a 10% premium as compared to a 23% discount, which is historically the figure. It's hard to say whether this rally would stop in the next, or there will be a huge correction. So I think with the shift that we are seeing from the unorganized sector to the organized sector, to the sectors which are actually totally absent from the large cap space and which are going to be beneficiaries of the economic development and more capex spending. I think these, the mid cap and the small cap can continue to see decent returns even in the coming year. But again, because we've seen this huge divergence in the valuation, which was, earlier in favor of the large caps in 2021, it has been reversed. So obviously, the outlook is, being that we are cautious, and we don't want to chase returns. Having said that, with a long-term view, go in a staggered manner and continue to make your investments with a long-term view in mind. Don't expect, I think slightly lowered expectations would be the better way to approach these two mid caps and small cap segments.
Fantastic. I'm guessing, Santosh, you have a similar view, and if you can also tell us what funds you like in the space and how to approach strategically investing in them, whether or not rebalancing is required if there are outsized gains in your portfolio right now.
Yeah, so there are 2-3 parts to this. Number one is when you look at the way the mid cap and small caps have performed on a 1 year, 5 year, 10 year basis, all of them are done phenomenally well. Now, when you look at that kind of data and when you look at investing for fresh, that's when you get a little confused. That is, should I take the mid cap call right now, or have I missed the whole rally and now it doesn't make sense? So I think the way to approach that is, if you're investing mid cap and small cap and you're beginning as a new investor today, I think you tone down the expectation, number one, and number two, exposure that you get into. For example, a year ago, or maybe a year and a half ago, if you would 30-40% of your portfolio could have been in mid and small cap, today maybe you will cut to 50% of that. The reason is bulk of the returns have been front-ended over the last year, year and a half, and in future, the numbers are just not so favorable for you. Not saying that we will not perform, but at some level, this performance is going to get plateaued out, number one. Number two, very, very critical. We're not talking about any particular stock or any particular sector when it comes to small and mid caps particularly. We're talking about good, well-managed funds. So therefore, in a good, well-managed fund like the one that we just discussed a little earlier, you have the luxury of the fund manager deciding sectoral view, value versus growth, number of stocks, within that also the weightages in the particular stocks. So therefore, that's where it becomes very important. So some of the names that I'm personally a little favorite of is, I'd look at a White Oak mid-cap fund where they're not allowing lump sum investments to come in. If you look at the DSP mid-cap, a 17-year-old track record fund, extremely consistent. Motilal Oswal mid-cap. Now, if I were to look at building my portfolio with these mid-cap funds, the beauty is that all of them have unique positioning and unique stocks. Now, of course, there is a small bit of overlap, but as an investor, you get different styles, different stocks, and different weightages playing for you. So the debate is not about should I or should I not. The debate is what is the percentage that you enter, and also what is the mix you get between different styles and portfolio managers.
Right. Got it. Prableen, last word, very quick. 30 seconds. Which funds do you like?
I would say Tata Small Cap and Mirae Mid Cap. And I really like the passive strategy, Alex. But again, one has to be very cautious with the passive strategy at this stage because, that is what would take a harder hit. There is too much of elasticity in the mid and small cap space. So the, highs and the lows are much sharper. So very long-term portfolio, go with passives. And I think in the medium to, slightly long-term, I would consider Tata and Mirae. And overall, take a staggered approach and, continue with the investments, but definitely lower the allocations that you are giving towards these two market caps.
Fantastic. Thank you so much, Prableen, as well as Santosh, for joining in and giving your advice to our viewers. Viewers, that brings us to the end of this particular edition of the Mutual Fund Show, but there's lots lined up over the course of the day. You'll find all of that right here on NDTV Profit.